It hasn't been too much fun to trade the Australian dollar versus the USD in recent weeks, but that's actually a blessing in disguise. Let me tell you why. If we connect these lines, we get a triangle. The triangle on its own is not a high quality pattern, I would say, but when you start to use them on a daily chart like this, then they become more powerful. And what it's telling us that we're consolidating between these two levels, and at one point we'll have a breakout. Now, obviously, if we extend these lines, then the break might not happen until some point in um, sort of July, but most of the time we break out way before that. So I would say in the next couple of weeks we'll have a breakout. Now the bullish break here is the easiest because if we break above that line there, then realistically we're gonna head to the upside, and you're looking at 0.6393. How much higher can we push? Well, if we measure the midpoint of the pattern, then it says we can push up with 229 pips. How about the downside? Well, the downside would look at a similar type of slide, more or less, and you're looking for a break, possibly right now at this low here. But what I think is going to happen is that we might create a higher low here. So I think this is going to narrow down further. And the great thing with these patterns is that they usually give us a very good risk to reward ratio. So, for example, if we have, say, a bullish breakout like this one here, and we buy, and then maybe the stop loss can be tightened up to something like, uh, I would say, maybe 40 pip, and then we'll look for the upside and could potentially make 238 pip. Then your risk to reward ratio is 5.6. So, not too bad, and definitely something to keep an eye on.